Hello again, everyone. I would now have the pleasure to introduce Philip Newman and Sarah Tomlinson from Metals Focus, who will provide us with an update on the 2024 silver market. Following their presentation, they will be happy to answer your questions. If you wish to ask a question, please raise your hand and we will bring a microphone to you so the audience can hear your question. Thank you. Sarah, Philip, you may now begin. Thank you.
Well, thank you, Octavio and Mike, and also to the Silver Institute Executive Committee, and good evening, everyone. So what we're going to do over the next few minutes, myself and Sarah will present our latest findings for 2024. I should stress that these are our latest estimates. We will continue over the next few months to get out into the market with our team of 30 in 8 markets, as Octavio kindly mentioned, to continue our research and then hopefully see many of you back in April for World Silver Survey 2025. We'll present the final figures for this year. So let's crack on. This is a slide that I've had to redo a few times over the past few days. This is where we settled on for the moment. But even though I've had to redo it, the core message over that time hasn't changed. So this year, silver has been the best performing precious metal, a rise of 29% intra-year, just eclipsing gold, and as you can see, leaving the major PGMs in its wake. And the reason that we've seen that is because we've had improved investment in some of the key metrics that we've seen. And just to pick on a couple of those, the more transparent ones, the high-profile ones, where a lot of the money is concentrated. And I think it's really important. Often as an analyst, I tend to focus too much on ounces, rather than, if you're an investor, of course, you're looking at it from a dollar or a value proposition. And so we've seen that, for example, the value of net managed money positions on a net basis are actually the highest since 2017, even though from an ounce standpoint, it's only the highest since, I think, May 2022. We also, I think it's also really important to compare it to what we're seeing in the gold space. And so what we've done on the bottom chart is just index that, first of all, for the past couple of years. So we've benchmarked that to the beginning of 2023. And so what that shows from a gold standpoint is you can see how gold really caught that safe haven bid, principally after the awful events of last October. You can see how that picked up. But if we're thinking about silver's outperformance for this year, then it's important then to redo those figures and just look at what they're doing for this year. And so now you can see how silver's performed. Now, of course, given the liquidations and the sell-off of the past few days, when the CFTC released the figures on Friday, which of course will relate to today, it will show, I imagine, quite a different proposition. But for the moment, on an intra-year basis, the net longs for silver have doubled, and for gold, still up a very respectable 70%. In the ETF space, again, we've seen renewed inflows into silver. And again, from a value proposition, quite recently, they were actually at a record high, even though in ounces, they're still about 13% below their highs. But what's really interesting for this year is that we've had, so far, about an 80 million ounce rise on a year-to-date basis, which is the best that we've seen since 2020. Now, if you're looking at the ETF space and we're thinking of these liquidations, in gold, there have been some heavy liquidations over the past few days. But as far as I've seen so far, we haven't seen that in the silver space. And that's, I think, really quite interesting. You know, many of you will remember 2013 when we had the washout. We remember it really well. It's when we started Metals Focus. Quite a bruising time trying to start a company at that time. But you had very heavy liquidations for gold then, but again, not in the silver market. Once more, comparing that to what we're seeing in the gold space, until a few days ago, yes, you've had a sort of renewed buying in gold in Q3 in terms of ETFs, but year to date, they're still down 2%. I also wanted just to highlight the upside we've seen in the Indian ETF space. Now, the scale of Indian ETFs certainly is nowhere near the iShares. It's nowhere near the Sprott ETFs either. But it's just really quite fascinating that you've had about a 20 million ounce rise this year. So that's accounting for about 25%, obviously 20 of 80 of that increase. So I think that's really quite an interesting dynamic we're seeing in the Indian market. We'll come to the coin and bar market later, but what's interesting about India is that despite that growth in the ETFs, from what we can see, it's not cannibalizing the coin and bar. So we just park that for the moment, and we'll come back to that in a second. Now, although this is a review of all of 2024, given what's been going on in the US over the past couple of weeks, you know, we have to really look at the liquidations and why that's happened. I'm sure everyone in this room has read about that. Quite a few slides we could put up to talk about that or to represent it. But I think this is one of the, perhaps the best ones I think we could show. So the red line shows you the Fed dot plot, where they see interest rates heading over the next few years. The green line is where market expectations were at the end of September. So as you can see, they're pretty much tracking the Fed. Then, of course, you have the election. You have Trump, which looks like he's going to have all branches of power. And we've seen, of course, expectations from a market standpoint become far more hawkish. And I think the last time we saw such a divergence, or not so much a divergence, but the last time the market was so much more hawkish than the Fed was much earlier this year. And so, you know, again, the impact this has had on the dollar, on other investment vehicles. And again, that's obviously been behind the liquidations that we've seen in the marketplace. So this is, of course, affected. This is not a silver-specific issue. This is across, you know, all precious metals. If we're thinking specifically about silver, then we have to think about, you know, what's been happening in China. And this is something that we've spoken about when we stood in front of you in April, something we wrote about at length in the silver survey as well. Given, of course, silver behaves, you know, as a precious metal, as an industrial commodity as well, the challenges in the Chinese market in terms of the property sector, concerns about the effectiveness of the stimulus measures, and that, of course, has weighed on silver to some extent. And that, as you can see in terms of that bottom chart, is what we've seen in terms of manifesting in terms of the gold-silver ratio. So as you can see, there's only been a couple of occasions over the past year or so when we've seen the ratio break below 80. In fact, the last time, I think, was just before the launch. So maybe it's something to do with the survey and the Silver Institute. But what we can see now, though, is that break below 80 was very short-lived. And I think we're getting some mixed messages. So on the one hand, I've showed you slides that from a CME point of view, from an ETF standpoint, you've seen more of a commitment from investors into the silver market. On the other hand, looking at the ratio, despite silver's outperformance of gold on a year-to-date basis, I think there is still some, a little bit of disillusionment with how the price has performed. And that is discouraging some investors perhaps from coming into the market, despite how good those figures are that I've already shown you. And some of that disillusionment relates to the underlying strength of supply and demand in the marketplace. So this is a slide that, again, we put up in April. And you can see the past few years how global demand has comfortably outstripped global supply. If you look at going back to 2010, some years of a modest surplus, some years of a modest deficit, no clear trend, whereas since 2020, we've seen that, 2021 rather, you've seen that become much more structural in terms of those deficits, not just successive deficits, but really quite sizable deficits. So I think, again, for some investors, they've seen gold at 2,700. They hear about the market in a deficit, and I think they would expect the price to perform better. But in spite of that, as I said already, silver has still been the best performer this year. So really, tying this all together, those ongoing deficits, you can now see the scale of the stock drawdown that we have over this period. This is a cumulative chart, but you can see through to our estimates for 2024 that we've now got to a cumulative stock drawdown of about 600 million ounces. That is really quite sizable. So just to finish up with a couple of slides before I hand over to Sarah. So these are our global summary slides for supply and demand. So you can see that for supply, we have that increase in scrap and mine production, taking you up to our estimate for this year of a shade over 1 billion ounces. But you can see very quickly that for global demand, even though you have the decline in physical investment, which is our coin and bar category, even though that is largely offsetting the industrial strength, which is a record high, overall, you can still see that global demand comfortably outstripping global supply, hence those deficits that we see in the marketplace. So what I want to do now is hand over to Sarah, who'll go through mine production costs and maybe a little bit of hedging, and then I'll return with demand.
Well, I made it up here, and I didn't fall on my face, so this is a good start. Mike has asked me to project my voice, so if I pitch it between talking and yelling at my kids, I think I should be okay. So this is my first slide. It's my usual colour by numbers map. So as you can see, it's a lot greener than it was last year. We're predominantly, the production is going to be supported by increased production from Mexico, the United States, and from Russia this year. So Mexico, that's coming from Peñasquito, coming back to full production following the strike in 2023. In the USA, we've got growth from Rochester, as commercial production has been declared at Rochester's expansion. And then in Russia, we've got the commissioning of Prognoz, and then we've also got the Udokan copper mine is also coming on stream. And then for Australia and India, we've got increased production from lead zinc mines. Looking to those that are coloured in pink or red, we've got lower production from lead zinc mines for China for the year, and also lower production from Peru, from El Brocal and Yauli. They both had temporary suspensions throughout this year. In Bolivia, we're expecting lower production at San Bartolome and also from other lead zinc mines. And in Argentina, we're expecting lower production from Puno and Cerro Moro. We do expect production will be 837 million ounces for the year, and of that, 28% will come from primary silver mines, and 29% will come from lead zinc mines. Mexico will remain the dominant producer, followed by China and Peru. If I move on to my next slide, we're looking at notable projects that are coming on stream. So 2024 has been a fairly busy year in terms of projects coming online. We've got Russia's Prognoz that's coming on stream. That's Polymetal, one of Polymetal's operations. Commissioning at the moment, they're doing like pilot mining, and they're transporting their ore to Nezhda. And that's got a 17-year mine life and just over 4 million ounces a year expected annual average production. We've also got Salares Norte, which is Goldfields, it's predominantly gold operation in Chile. That's currently undergoing commissioning. There's been a lot of issues with the commissioning there just because of delays, extreme weather events, winter weather. Salares Norte is expected to have a 13-year mine life and just over 2 million ounces a year. Then we have Adriatic Minerals' Vares project, and that's in Bosnia. Again, a 17-year mine life and just under 5 million ounces annual average production for the year. Vares is currently undergoing commissioning, and they are expecting commercial production to start this quarter. And then we have Endeavour Silver's Terronera, which is also commissioning at the moment. And they are also going to be commissioning that towards the end of this year. A 12-year mine life, and then an annual average production of 3 million ounces. Now, if you look to the right-hand side of the chart, you will see that it's a bit blank. So there isn't anything in our database that will be coming on stream immediately in the next couple of years. So we do have some projects that we're keeping an eye on. So we've got Endeavour Silver's Pitarrilla project, and then Fresnillo's Orisyvo project, and Bear Creek Mining's Karani. And there's also Hudbay Minerals' Copperweld project. But all of these are actually within the pre-feasibility and feasibility stage at the moment, and there's been no positive investment decisions. So I'm going to turn our attention to cost. So this is looking at primary silver miners' costs for the first half of this year. And this curve is showing the costs for the first half of this year versus the first half of 2023. So if you look to the right-hand side of the chart, you can see where the line crosses the line that we have for the silver price. So you can see almost 90% of production was, for the primary silver miners, was profitable in the first half of this year. Towards the left of the chart, you can see that just around 60% of primary silver supply was actually produced at a lower cost than it was in 2023. However, the inflation has persisted throughout the year, and in the first half of 2024, there was also lower production, so that's putting pressure on costs. So it was up marginally. I mean, it's 1% year on year, so virtually flat, to be honest. But it was $16.2 per ounce was the the half-year average. But there were still healthy margins for this first half of the year. It was up 36% year on year for the primary silver producers. But I think the key story in terms of the all-in sustaining cost was the increasing metals prices pushed up the byproduct credits, which then outweighed the increases that companies saw in their corporate overheads and their royalties and their sustaining capex. So if we look at some of the drivers in a little bit more detail. So the chart on the left-hand side, you can see that we have the oil and gas prices. Now, oil was relatively stable throughout the year, but it was, throughout the first half of the year, but it was still trading at over $80 per barrel, which is substantially higher than it was in 2020, 2021. Gas prices were more volatile than the oil price, and so this all lends itself to elevated costs for our producers. In addition to that, there is still an ongoing skills shortage, and so employee costs are still high. Miners are having to spend far more money to attract and retain staff. And then in terms of consumables, there's also, prices are still elevated there. If we look at the chart on the right-hand side, this is the byproduct metal prices. As you can see, the gold price going on its meteoric rise from sort of towards the end of 2023, but there was also increases from copper and lead and from zinc. So this has all lended itself to offsetting those costs that we were, the higher costs that we were seeing, or the on-site costs. We also saw a shift in terms of the byproduct credits. So the gold, the byproduct credits from gold in the second quarter of this year actually shifted. So it was down to 42% from 45% in Q1. So this waterfall just gives you a bit more colour in terms of how the byproduct prices have countered the persistent elevated costs. So on the left-hand side, the big red bar there, that's the increase in your on-site costs, and that is where your oil, gas, your fuel, your labour, and your consumables will contribute in terms of the all-in sustaining costs there. A small increase in royalties and the corporate overheads and the sustaining capex, but then on the right, towards the right-hand side, you can see the increase in the byproduct credits, bringing that all-in sustaining cost back down to that just over $16 per ounce. Now, I would like to talk to you about hedging, because we all know that it's my favourite bit. But no one's really been doing much. So my chart would be kind of really small. So what can I say? Yes, well, forwards at the end of Q2, we had 500,000 ounces. And options, delta adjusted options, just like 3.5. So yes, we had 4 million ounces on our hedge book, which is the lowest, I think, Mike, for many decades. So if you want to make my life a bit easier and more enjoyable, can you do some hedging? And with that, I will hand over to Philip.
Thank you, Sarah. So I just want to dig a little bit deeper now into some of the key areas of demand. And we can look at that either by country or by sector, and we'll try and do a little bit of both. So key markets, the largest fabricators, China and India. China hit a record level of demand. India, nice recovery. And I think you're going to see quite a few figures where India's got quite a sizable influence, and therefore it's not going to be, I think, a representative in the sense that 22 was a record high. It's unlikely we're going to get back to that. So I think if we sort of strip that out, the figures that we're going to see where India has that influence are still very respectable for 2024. The reason that China has done so well is because what we see happening in the photovoltaic market, which underpins or is part of our electrical and electronics category. And it really is quite staggering. So for electrical electronics, in just 3 years, we've added about 120 million ounces of silver. So, the growth rates that we're looking at for this year may look modest, but it's a record high, and it's built on top of what was a record high. So I think that's a pretty respectable performance, to put it mildly. What I want to do is now dig a little bit deeper into the photovoltaic market. So we've got a few slides on this, and we're going to talk about some of the strengths, some of the headwinds, the challenges that the market's facing. But for me, this is the most important slide in terms of the key messages for PV. So number one, a record amount of silver that we estimate for this year, just over 200 million ounces. So please remember that, I think, when we're talking about some of the challenges the industry is facing, a record level of demand. On the other side of this slide, of this chart, is giving you a sense of the average decline in silver loadings going onto these cells. So obviously, around when we had silver getting to $50, you had an incredible reaction from the industry. I don't think there's been much thrifting before that point. So there was a lot of, quite straightforward, low-hanging fruit to get rid of or to, take silver out in a manner of speaking. As we go through the years, even though there were periods when the silver price was subdued, industrialists remember when silver was $50. They remember the price volatility. And so we do see ongoing efforts to thrift. And if you can just make out on the purple line for 2024, it just dips down a little bit, if you can see that, which means that there was a little bit more thrifting, our estimates suggest, this year than last year. So let's just understand that a bit more. So when I talk about parts of the industry being under pressure and there being some headwinds, now we're thinking specifically of China, and we're thinking specifically of Chinese companies making panels to be installed in China. So what we've seen is that when they're bidding for contracts, the price they're offering for their panels or their quoting has been declining. And it's been declining basically because there's just too much capacity in China in terms of producing panels. And so they're trying to move their stocks. And what this means is that very recently, these panel manufacturers have been offering their panels at below cost just to move them. And so what that means, what's happened is that the China Photovoltaic Industry Association, which is not a state body, but it has the state blessing, has basically asked or told companies to stop doing this. So we should start to see some of these prices pick up a little bit. But the industry, from a financial point of view, is struggling, even though, as I just mentioned, you are seeing record amounts of silver being used as well. And that's not about to change, just to be clear on that point. And so what we wanted to do is give you a little bit more in terms of the thrifting that we're seeing. Now, although Mike said I'd be answering questions afterwards, really happy to, but not on this slide. So this was prepared by my colleague who looks after the PV research for us. I'm just a humble economist. He's a scientist. So I only understand half of what's on here. But we really wanted to give you the detail so you can take this away and digest what we're seeing here. Now, the other thing which is really important, although we're quoting percentages for reduced silver, this is not for the whole industry. This is for select manufacturers. Each manufacturer is at a different place in their R&D. Some of them will be much, much lower than this in terms of how they're reducing silver consumption. But this is one of the areas that the market is focusing on. The one to perhaps highlight is the, if you can just see that little purple bar, the HJT, which we haven't seen any growth. This is where they are using silver, silver-coated copper powder. So you have seen quite a reduction in silver usage. But you're not seeing these companies switch to that at all. You can see it's barely moved in terms of its market share. And the reason they're not doing that is because they're struggling financially. And if you're going to move from the TopCon to HJT, you've got to rip out your production lines, put in new production lines, so by definition, pretty expensive. So that, in a sense, is a limiting factor, and that's benefiting silver as well. But I guess the other point, we see in the Chinese market is how fast they can adopt new technologies. Again, this chart, as you can see, TopCon was barely a footnote in 21 and 22, and now look at it. So the industry can move pretty fast. It has demonstrated that. But again, although we're showing you all of this, the reason for showing you in terms of the order of my PV slides is that for me, and hopefully for you, the key takeaway is that silver hit a record high this year in terms of PV demand, and for our model, we see further upside or strength going forward as well. And that's really important in the context of that deficit that we have in the marketplace. Moving away from that and just looking at India a little bit. So India is really interesting because, we look at the price in dollars, which is, up 29-30% this year. But in India, well, they've gone through record high levels in terms of their price. It's gone through 100,000 rupees per kilo. So of course there's some pushback in some parts of the market. It is a price-sensitive market. But as you can see in terms of those bullion imports on the far side, now that's a year-to-date figure. That's not our estimate for the full year. So that's going to be stronger than we see on this chart at the moment. So yes, there's some pushback, but also there are some areas that are continuing to do well despite the price that we see here. And one of those areas where India is doing well is in the coin and bar market. And that's sort of the grayish color of sorts you can see there. That has only, though, partially offset the weakness that we've seen in the US market. Now, this is not a silver story. This is a precious metal story. And in a sense, although silver demand has really backed off in the US, there have been liquidations of silver, I would suggest those liquidations perhaps haven't been that aggressive in contrast to what we see in the gold space. I'm looking for confirmation from some of the people in the audience, but I'm getting poker faces. And I think, though, for the year, what's interesting is that in terms of the US market, in terms of the coin and bar, there's different parts of that. One of those parts is the IRA market, the independent retirement account. And my understanding, that's still doing pretty well, even this year. I think, from what I'm hearing, there is still some growth in that market in terms of silver in 2024. But despite that growth, we still have the market down quite heavily overall. And I think one of the concerns for the next couple of months and for next year is that a lot of the retail investors, not just for silver but for gold, they tend to be Republican-leaning. And so the fact that Trump is, as I mentioned earlier, likely to be in charge of all branches of the government, well, if you're a retail investor, that's a fantastic position in terms of reducing their uncertainty, giving them confidence in the direction of travel for the US. And so I don't think we're going to see liquidations, but it could really hit gross purchases. So that's something I think we should just be mindful of, again, for the coming months and for next year as well. Just finishing up. Now, I mentioned about India. So again, even though we are seeing some pushback because of where the price is, and I think that's quite understandable, we are still expecting global jewelry, global silverware to rise this year. Again, as I mentioned earlier, the record level in 2022, I don't think is a realistic benchmark. And so stripping it out, I think these are very healthy totals. But you can see how important India is. So for jewelry, global demand is up 5%. If you strip out India, it's only up 2%. Silverware, where India, of course, dominates, again, the global total by coincidence, up 5%. You strip out India, it's down a shade. So that gives you a sense of how important India is to the market. And it will be interesting to see whether it adapts to these prices. Of course, prices have fallen sharply over the past few days. And so I'd imagine, given how important this time of year is in the Indian market, that should be, I think, helping to maybe offset some of the sluggish demand we've had for a few weeks. And so, just to finish up with my final slide before Sarah and I take questions, I've shown you these before, but again, I just want to reiterate the message, I think, of a market where we have very heavy deficits, this stock drawdown. And as you can see in terms of the chart with the green bars, even though we may not hit the scale of the deficits that we're seeing here going forwards, I think that is perhaps less important than the fact that we do feel the market will remain in a deficit for the foreseeable future. And on that positive note, I'd like to invite Sarah up and we'll take any questions you may have. Thank you. Steve, hi.
About that slide that you didn't want to talk about. No, I think a turning point in the last several months was the stepping down of Biden. And what that led to is really the acknowledgement that we were a nation that didn't really have a firm leadership. And geopolitical tensions certainly rose across the globe. It was the Middle East, Ukraine, China, North Korea. Now fast forward, and here we are, and that's all seems to have dissipated. But what's really turned to in commodities is tariffs. And we see a lot of people very worried about the impact of the upcoming tariffs with Trump as president. Do you have any view on how this could impact? Because we're seeing metal moved around, people worried about where it is, premiums are escalating on the wholesale level because of that, less so on the retail side.
I mean, obviously, the fact that he has all the branches of government means, in a sense, to put it crudely, he can do with what he likes. Of course, the US is still part of, NAFTA Part 2, it's still part of the World Trade Organization. Is the US going to withdraw from all of those? I don't know. Can it do so? So let's just put that to one side, which is a huge headwind as it stands. I'm just not convinced that there will be tariffs on precious metals. Is he going to, I know his views on Europe and maybe the UK with our election interference, but I just don't think that's going to necessarily happen. I mean, I have been speaking to a few people about this, and I think there is a general agreement that it will, I think, be perhaps China-centric. But I don't see what he gets by targeting, a large bar out of London or out of Switzerland into the US, or a bar which is deliverable along to the CME. Are we going to be taxing silver coming out of Mexico into the US? I don't really see that. I don't know whether you agree with that, but I would struggle to think that would happen.
Thank you. My question also is about the new administration. I want to know what you see as a potential pullback and how aggressive it may be for the industrial silver market in the United States with solar, electric vehicles, and alternative energy sources being effectively sidelined and disincentivized under the new administration?
That's a very good question. Well, I don't have the figures to hand in terms of the size of the PV market or the installation market in the US. So yes, I guess that will certainly be a headwind. I think taking a step back, the fact that you are having more countries globally committing to PV, India is a very good one from that point of view. So I don't think that will have a tremendous impact. And in terms of the electric car, again, the US obviously is lagging behind there regardless. So I think there will certainly be a hit from that point of view. We've obviously already had, EV growth rates being scaled back to some extent. But no, it will certainly be a factor. But I think from a PV, from a silver point of view, I think that will be perhaps less of a headwind, to be honest with you.
Couple of different points. One is I'm kind of surprised you guys didn't mention Idaho. As a matter of fact, we just financed a company in Idaho with 1 million ounces to produce silver. So there's quite a bit of actual development in the northern Idaho of mining of silver. So there is a lot of coming out of there. Separately, on the kind of EV front, one is that panels are getting a lot more efficient, so they should be using a lot more silver. So I can see why China is kind of trying to get rid of the panels that are less efficient, just because there is new panels coming out that are a lot more efficient. So I do believe there is a lot more silver being used in that as the new panels ramp up. And from the EV point of view, I think, like you said, we're way behind, and there is a lot more development coming.
I'll take that one first. So I think from the solar point of view, I don't think they're trying to offload inefficient panels. It's purely a factor, and I agree with you that the new panels are getting more efficient. We see that. But no, I don't think it relates to offloading inefficient panels. It's simply the fact that there is just too much production capacity in China vis-a-vis demand. I mean, demand is already really healthy, don't get me wrong. You know, China installs roughly indicatively half of global production. So the actual China is manufacturing about, I think, 95% of panels that are used globally. But of that, half are installed. So it's a big market, however you look at it. But it's still struggling with overcapacity. So it's not relating to the inefficiency or they're trying to offload inefficient cells. Yes, you're right that there was a trend overall to the new technologies having more silver, but I think we're almost getting past that because they are looking to the thrift as well. So, you know, that's why that chart I showed you with that line of the loadings, that's an overall weighted. So that's doing a couple of things. One is taking into account the new technologies, but then it's taking into account also the thrifting that we are seeing. So it is looking at all sides of the market, not just one part of the market.
And thanks for your comments about Idaho. I was just trying to give an overview, sort of really, of the United States. And in terms of our database, Rochester sort of sticks out there as the expansion. But I'd love to catch up with you later and chat more about the ounces and where they're coming from.
Thank you. Is the Chinese Photovoltaic Association governmentally sponsored, or is it just an advisory firm?
Oh gosh, I would say government sponsored. I think in the broadest terms, yes. I mean, I can't tell you the specific relationship because I don't know, but it has the authority. So even though it's not a state body, it has the authority that when it requests that you stop offering or going out for tender at cost or below cost, the companies listen to that. Now, speaking to my colleague in Taiwan that monitors this, not every company is sticking to that by any stretch, but the larger panel manufacturers certainly are. But I think, as I said, it has the blessing of the state, so when it says something, you really should listen.
Has there been a mandatory proportional decrease, for example, 10% for everybody, or 17% for everybody, or any number?
So has there been a mandatory?
So far.
Sorry, say again, please.
Has the association mandated that producers reduce their output by a certain percentage?
No, it hasn't done. As far as I know, the answer to that is no. All it said to them is that you can't offer your cells at below cost. And I guess that in itself is restricting what's being offered, because these guys are, as I said, trying to offload their excess panels. Now, maybe I didn't say that, but although that's a factor now and an important factor, and we think that will remain for the next few months, we don't think that will be an issue next year. So there should be more of a better alignment between production and installations. So we think the excess production would have been addressed, but time will tell. Sorry?
They may not even know what their costs are.
No, I think they know really well because, you know, they are pretty hot in terms of knowing where their margins are, et cetera, et cetera. No, I think they do know that. I think they're quite hot from that point of view.
Hi, my question's for Sarah, actually. You talked about how hedging this year hasn't been very high. I'm on the trading side, actually, and I would agree. I don't think I've seen half as much go through the market on the back end as I would have expected, both in silver and gold, actually, especially given where spot's been this year. You kind of would have expected to see a lot more go through. What do you think it takes next year, in the next 12 months, for us to see that hedging activity kind of reappear in any kind of meaningful way?
Oh, good question.
Thank you.
I think so the gold space and the silver space are quite different in terms of their hedging and who undertakes the hedging. So often on the silver side, what we're seeing is the base metals producers will then be hedging their byproduct, you know, to sort of protect their revenues coming through. So the fairly significant hedge came through from KGHM in Q2, but obviously they're predominantly the copper producer. So, you know, they're just protecting their silver revenue. In terms of sort of maybe primary silver producers, what will we see? It's often linked to the debt financing. Is there a project that they're bringing, you know, want to bring on stream, and how are they financing that project? And if it is debt financing, is there a mandatory hedging within that, or do they want to sort of, you know, protect their capex and their cash flow? But as I showed you on the project slide, we've got projects that are being developed this year and will be being commissioned and will be ramping up production next year. But there isn't too much going on at the moment. So I would see if more projects are being given positive investment decisions sort of in 1 or 2 years' time, I would see that, you know, perhaps hedging will begin to, you know, tick back up.
Splendid presentation again, Philip and Sarah. Really great stuff. You know, I agree. We have these yawning deficits for silver. My question is, you know, like gold, it's never consumed. It is well, it's not quite the same with gold, but a lot of it's lost, a lot of it gets tarnished. But there still is a lot above ground. At what point do you think, price point, because it used to be $30, so it used to be above $27 where you would get significantly more recycling coming into the market. Well, first of all, how well equipped do you think the recyclers are to absorb significantly more silver coming on to plug these deficits? And at what price do you think that they'll be encouraged to come in?
Well, I think we have seen, and I was incredibly surprised by this, a lot of flatware coming out in Canada, Germany, even a little bit in the UK, and I didn't know there was flatware stocks out there, really. And we know that, you know, some stopped taking more as well. And I think also moving away from flatware, I think if you speak to some refiners, be it in North America or Europe, they'll say they've got quite a lot of silver, and some of them maybe don't want much more. And taking out another point, you've seen, not massively, but maybe the beginning of it. You've seen, for example, out of Germany into London, you've seen a pickup in large bar movements of silver in the past 2 or 3 months. And that's incredibly unusual. So I think that, you know, that is really quite interesting. So this deficit is being partly satisfied by some of this recycled material. And although not massive, you know, the fact you're having a little bit of sort of silver coin and bar that's being melted as well, more bar than coin being melted. Not so much melting in the US, I think, but in Europe, in Germany, you've had I think, product melt there. So I think that's where some of that's been coming from. In terms of the price, I think that's a really interesting question because, you know, it's quite straightforward to estimate, well, not estimate, we can see what the exchange stocks are, be it LBMA, Volts, or SGE, SHFE, or CME. It's about 1.2 billion ounces. So then you try to think about what else is held. And, you know, a lot of that, I think, is incredibly sticky. So you think about the IRA silver, and I think there's a huge volume of that in the US. That's not about to come out whatsoever. Then you think about something like Loco Zurich, which is a large bar market, but that's, I think, held by family offices. Again, long-term strategic holdings. Silver at $35, no interest. $40, maybe. I think they start thinking about it. I think you may need something north of 40, will be my, you know, back of the envelope. Because I just don't think they're about to sell. They don't need to sell. They've held it for so long that I think this metal is very, very sticky. It really is. Hold on, David. The curve. I got away with it.
Hello, Philip. If you to your last slide. Doesn't that just represent a change of ownership of the stock? We got multi-year stockpiles on the ground of silver. And when you report a deficit, it's usually from investment demand. And isn't that simply a transfer from one holder to another? And you were just talking about going into sticky hands. But I'm thinking of palladium, and we had a 3 million ounce ETF, and no one was going to ever sell it. And then the 3 million ounces became 1 million ounces. Same can happen. I think the same can happen in silver.
Well, first of all, in terms of our supply demand, we have ETFs, what we call below the line. Because although, you know, ETFs are such a fundamentally important part of the market, that we know that, but for our point of view, that is a stock movement of a, you know, part of a bar or a large bar. So that's not part of our supply demand. So that's not part of these deficits. So this is capturing a fabricated product. So part of that, yes, is the coin and bar. So part of this is manufacturing a 1 ounce round or a 100 ounce in the US. So that would need to come back and be melted down. And so that's part of that. But an important part of this is your jewelry or silverware, your industrial demand. Now, I guess you would argue, well, the jewelry in India is part of that above ground stock. That's quite near market. That can come back, and we've seen that. And I guess my point about the flatware in the US, not a big part, but is also near market and has come back. But that is the fabricated product, and some of that will never. For example, the photovoltaic. I know there's attempts to recycle it. I don't think they've been particularly successful. And, you know, even if they were to work, that is pulling silver off a panel, say, of 15 years ago, where the loadings are much higher than they are now. Is it going to be profitable? So, for example, now, this year, 200 million ounces going into PV. Is that going to come back? I'm never going to say never, of course not. But I think that is quite different. So I don't think it's just a stock movement, as you're talking about, in terms of the analogy with palladium, with ETFs.
Okay, this is our last question of the evening.
Oh, Dennis, yeah.
Last question. Just as we wait for some announcements with the cabinet picks here, it does seem like they're signaling aggressive dollar, aggressive fiscal policy, tax cuts. Do you have any projections or view on gold-silver ratio in the next 12 to 18 months?
So I think, you know, I guess we are generally, you know, in spite of the sell-off, we are generally positive for both gold and silver from an absolute price standpoint in the coming months. You may see that, you know, given we still don't think the Fed's going to, even if it's not reducing rates as much as the market now expects, as we get into that rate cycle of more reductions, I think some of that will be priced in. Maybe you'll start to see prices come off a little bit to some extent. But from a ratio point of view, I don't think that's going to change dramatically in the next 12 months or so. Further out, I think it will. I think once you get past this time of so much of the price action is investment driven, and we get past that, then I think these deficits, again, even if we don't get to this scale of deficit, I think that really healthy supply-demand dynamic, I think will start impacting silver, pushing it higher, gold lagging behind, and I think then you could start to see the ratio come down a fair amount, but that is going out well beyond this and probably well beyond the silver survey as well. But that's what we're saying longer term.
All right. First of all, I want to thank everybody for coming this evening. This has been one of the most well-attended events we've had for an annual silver industry, an event we've been doing for close to 30 years. It's the support of all of our member companies here in the audience which makes tonight possible. But I also want to thank the members of our executive committee that donate and devote so much time to really setting the program which we're in charge of executing on their behalf and on behalf of the global silver industry. 2 quick points. Next week, we'll be releasing a report on why institutional investors should invest in silver. And later in the year, to one of the questions here, we're putting on a report on above-ground stocks of silver and that price mobility which would make them move. So please, I encourage you to follow our work. I thank everybody again this evening, and have a safe trip home. Thank you. And thanks to Metals Focus. Mauro, what a great job. Philip, Sarah, great work. Thank you.
Good with you.